All right, let's just jump right into it because the AI market just had one of those days. You know the kind, the ones that make everybody just a little bit nervous. We saw stocks dropping, some huge names selling off, and really the only question on everyone's mind was, is this it? Is the AI party finally over? Well, today, we're going to peel back those headlines and find out what's actually going on underneath.
And yeah, at first glance, it really did look like a party foul. I mean, look at this. We saw two absolute giants of the AI world take a pretty serious hit. CoreWeave, which is a super important cloud provider, just plummeted almost 14%. And NVIDIA, I mean the undisputed king of AI chips, they dropped around 3%. On the surface, that is absolutely enough to send a shiver down any investor's spine.
Which of course leads to the question, the one everyone's been kind of whispering about for months now. Are we watching the great AI bubble of the 2020s finally, pop? And it's a totally valid fear. But as we're about to see, the story behind these numbers, it's a whole lot more complex and frankly, a lot more interesting than just a simple market crash.
So let's start with CoreWeave, a 14% drop in one day. That is a massive, massive move for any company. And the reason for it seems pretty simple at first, but this is exactly where what we think is happening starts to pull away from what's really happening. So, what was the real story?
So what caused that gigantic drop? You'd think it was because a huge customer bailed, or maybe that demand for AI just vanished overnight. But no, it was because of a delay in a single data center project. We're talking about a physical, real-world construction problem. Because of that, they had to slightly trim their revenue forecast for next year, and boom, the market panicked.
But here's the absolute key, and it comes straight from the CEO himself. He framed it perfectly. This isn't a loss of revenue, it's a delay. The customer isn't going anywhere. The business is still there. It just got pushed back a little bit because of a snag with one of their partners. So this wasn't some kind of business crisis, it was a supply chain headache.
And what this does is it perfectly highlights a huge challenge in, well, pretty much any modern business, third-party risk. As CoreWeave's CEO explained, nobody, and I mean nobody, controls the entire supply chain. You don't control the concrete being poured for the data center, and you don't control the design of the microchips. You are always depending on partners. And hey, sometimes those partners just hit a speed bump.
So what do you do about it? Well, you don't freak out, you make a plan. And CoreWeave is already tackling this head-on. First, they're diversifying their clients so no single customer has too much power. They're doing the same with their data center suppliers. They're even building out their own teams to construct data centers in-house. And finally, the bigger you get, the smaller the impact of any single delay becomes. Scale really does solve a lot of problems.
Okay, so that's the CoreWeave story. Now, let's get to the second mystery of the day, because this one adds a whole other layer to the puzzle. While all that was happening, the market was also getting spooked by some news from SoftBank, the giant Japanese investment group. They were selling off their stake in NVIDIA. And you just have to ask, why on earth would anyone sell a stock that has basically been the engine of the entire AI boom?
And look, we're not talking about just trimming a little off the top. We're talking about a $6 billion liquidation. SoftBank sold its entire remaining stake. When you see a huge, sophisticated investor dump a market leader like that, your first thought is, uh-oh, they must know something we don't.
But is that really what's happening here? Is this a vote of no confidence in the one chipmaker that is powering this whole revolution? I mean, the easy answer is yes, but the real answer? Oh, it's way, way smarter than that.
You gotta have a little context here because it's key. SoftBank has pulled this move before. They sold out of NVIDIA way back in 2019, a move their own leadership later admitted they deeply regretted. Why? Because those shares would have been worth over $200 billion today. So why in the world does it look like they're making the exact same mistake twice?
Because they aren't. This isn't an exit, it's a pivot. See, SoftBank isn't cashing out of the AI game. They're taking that $6 billion and they're pouring it directly into building their own AI data centers. And take a wild guess what kind of chips they're going to buy to fill those data centers. Yep, NVIDIA chips. They're just moving their investment from one part of the machine to another, from the chips themselves to the buildings that are going to house them.
And this is when you have to zoom out, because you realize that these two stories, CoreWeave's construction delay and SoftBank's big pivot, they're actually the same story. They're both just symptoms of a massive, frantic, industry-wide gold rush for one specific thing: physical infrastructure.
I mean, this quote from the CoreWeave CEO just says it all, doesn't it? The problem isn't a lack of demand. The problem is that the demand is so huge, so completely overwhelming, that the entire market literally cannot build data centers, secure enough power, and get GPUs out there fast enough to keep up.
And this scramble, it is happening everywhere you look. You see it with Microsoft planning a $10 billion data center in Portugal. You see it in the talent wars with Intel's AI chief jumping ship to OpenAI just to work on infrastructure. You got top scientists leaving giants like Meta to launch new companies. The bottleneck is physical. There is a systemic, fundamental shortage of GPU infrastructure.
So, let's tie this all together. What are these market jitters and construction delays and billion-dollar moves really tell us about where we are with artificial intelligence?
You know, it all boils down to this: perception versus reality. The market's perception was all about fear, that demand for AI was weakening, that the big players were losing faith, that the bubble was finally popping. But the underlying reality is the complete opposite. Demand is so ridiculously strong that supply can't keep up. The big players aren't losing faith. They're raising incredible amounts of capital to fund the build-out. The bubble isn't popping because of hype. The industry is hitting the hard physical limits of growth. These aren't signs of a collapse. They're the growing pains of a revolution.
And that really leaves us with the big question for the next decade of AI. The ambition is there, the software is there, the demand is definitely there, the revolution is undeniably here. But the defining challenge? It's not going to be in the code, it's going to be in the concrete. Can we physically build the future as fast as we can imagine it? That's the real question. Thanks for tuning in.